We had this real interesting trade on crude oil this morning with the Counterpunch trader. We lived this in the trade room. I thought I would recap it and walk you through it in case you missed it or was wondering how we handled it. So in case you don't know, we start trading crude oil at 8:50 a.m. and today is Crude Oil Inventory Day. It's also FOMC Day, so a lot of things to be thinking about here. Ultimately, we're looking to take the first trade that we're nearest. You have this trade that's set up to go long here at 8:39, and we were looking at that and we thought we might have a chance to grab it as it did pull down, and we're getting closer to our 8:50 start time. But then it pushed up, and at 8:49 we got a new setup. All right, so when we get a new setup, that's the one we're interested in. And right at 8:50, it pushed through. Well, not yet, but it will right here. No? Right here. So this is where we picked it up. Right there. And that trade has a 24 tick risk. Target 1 is at 14, target 2 is at 23, and target 3 is at 32. And the reason why the risk reward is a little skewed on this, a little bit out of favor, below 1.0 on the second target. First of all, it's not that big of a trade, but second of all, it's because of the key level adjustment. Instead of getting in right at 99, it pushed up to 01, which took 2 ticks away from the profit objective and added 2 more ticks on to the risk objective. Plus, it's further down off the line. You can see how it's below this. The stop is below based on the bar on that first dot. Okay, so just a slightly larger risk profile. What I like about the trade is that the 50 EMA is pushing up. You get that kind of elbow where the 50 EMA is pushing up towards the 200, implying that we could have strength to the upside. And our histogram, you know, the faster trend on the higher time frame chart is also up. Although I'm a little concerned that it might be faltering here, but it's just, you just can't base trade decisions on that because that could change with the bat of an eye. You have to go with the setup and stick with the rules. And so we took that trade, 57.01, and it looked like it was going our way. The purple trade that happened earlier just hit its first target. So anyone kind of jumping in sooner and grabbing that trade would have already been at a profit point with the stop pushing up. Now, because the calculator is tracking the purple trade, the green trade is what you call an add-on or an additional trade, but that's the one we're interested in. And then the market just gets weird. It starts going up and down and choppy, and there were a couple places where we thought we might get shorts, but because of the filters we use, the squeeze zone filter kept us out of this one. And by the way, this is a beta test of the new calculator the Counterpunch traders are going to end up getting. So the filter is worked in, and I have it turned on. So if you're not using the filter, you might have seen a short here. But it ends up canceling up in here anyway, so we're still long. Right here was interesting because you also have the filter. You're in the chop zone, so you don't want to short against the 50. You're in the squeeze zone. You don't want to short against the 50. And the new calculator didn't even show the trade. All right, so I put some arrows here. I forget why I was talking about stuff in the trade room. All right, so then still kind of inching along, and our stop's down here, and it almost came down and hit the stop. It missed by 2 ticks. I'll just mark where that stop is so we can see it going forward. But it came down, stops at 77. It came down to 79 on 4 occasions here. And then all of a sudden it's starting to push upwards. You have a new setup right there. Of course, we're not interested in that. We're still in this one. And then it finally pushes up, and it almost hits target 1. And check out the time, by the way. This is all the way at 9:29. We got in this trade at 8:50, so we're in this trade over 40 minutes. Finally, it pushes through, hits target 1. You can take profit there, and you can move your stop up to lock in 1 tick. So the stop's going to move from 01 to 02. And then the signal line started moving higher, and so did the price. And the price ends up pushing up and just barely missed target 2. Target 2 is at 15, got to 14. So depending on how many positions you're trading, normally if I miss target 2 by 1 tick, I'm going to push my stop up to target 1 as my fail safe, and it did come down and touch target 1. So additional positions, you're holding on for target 2, for target 3, and trailing. And what happened was it did end up pushing down, but the stop is still down here because if we're trailing the signal line's at 91, the stop would be at 89. Remember, you have to, the signal line was at 08. So the stop would be at 04 after the key level adjustment. So there it is. And you could borrow the stop from this bright green trade because that's now tracking the signal line as well. Remember, the dark trade is a trade the calculator is not tracking. It doesn't mean it's not a good setup. As you can see, it worked out great for us. So is this trade over? No, it's not. Well, it depends on how many positions you're trading. Might be over if you got out at target 1 with your target 2 position, you see. But if you're still trailing, you're still in, and it comes up, and the trailer pushes up. You can see it's inside that bar. This bar closes above the signal line. You move the trailer up from here to here, 57.14, and that's where the rest of the trade stops out. So missing target 2 by 1 tick, that counts as hitting a full target 2 winner as far as our power of quitting goals go. So that's it. One and done. A slow, long, grinding trade, and it worked out. It was a nice winner. All right, so then everyone's waiting for the crude oil report. As you may or may not know, we start trading a separate session, and it comes out at 10:30, and 2 minutes later we start looking for trades. And so here it is. You can see it's moving higher, but it's still only 30 seconds after the report comes out. Finally, you get a setup here 1.5 minutes after it comes out, and that trade ends up not canceling, but we get a new setup instead. And if we get a new setup, we always go with that one. And so that's the trade right there, 10:32. We've waited our 2 minutes, and it's kind of a small trade. It's only 10 ticks to the middle target, so we'll ignore the first target. So you can go to target 2, target 3, and trail. And what happens is it comes up, comes down, pushes up, hits target 2. There's your 10 ticks. Lock in 1 tick in the trailer, which is right there, right at 83, right at 83. And it pushes even higher. This comes down, but it only comes down to 85. So the stop holds, pushes higher, hits target 3. We're trailing the signal line all the way up to here, where it gets out at 58.09. So a really nice trade. One and done again after the crude oil report, and an excellent session in crude. And just briefly, I'll point out I'm also testing the trade assist, the automation for the counterpunch, and I'm running it on the Euro US on a 377 tick chart. It's a really nice day trading chart for the counterpunch. You had a long trade here, comes up, hits target 1, stops moving up, locking in some profit, and then it all stops out for a partial profit. Then you have target another trade, and this one you can see it hitting target 2, target 3. Once it hits target 1, the trailers start, and then it went on a little further, and the third position came off right there. We've got 3 positions built into the trade assist. You can see it's working great, and cover the symbol, pretend it's crude oil, pretend it's any old chart. Works the same way. So there you go. Nice trade on the Euro US today as well. All right, hope you enjoyed this video. See you on the next one. This is TJ with netpicks.com and the Counterpunch Trader.